Today in the grain market, we saw a big surge in soybeans. That extreme heat across that central states is really kind of boosting the market here. We were up 49 cents today at one point, but it's no surprise since we were pretty much oversold for quite a while. So we did get a big momentum up on the upside. That being said, some of the money managers have kind of trimmed down some of their long positions, both in soybeans and in corn. I'm not sure if that's actually going to put a little bit of a lid on the market, but today it really came out of the box pretty strong right now. There really wasn't much added to the option open interest, but they were adding. I mean, 1,200 to the call side and 500 to the put side. So there is some risk management going on. That's something to watch as we go forward. The C-vol for soybeans is 31.9%. The oil at 46.4. We kind of just looking like at that like it's not a big deal, but 46% volatility is really pretty strong. The meal's at 32.4. That's still pretty strong as well. Now the corn is higher today. Triple digit temps are expected to extend out to almost 10 days. So it's going to be, could even be almost 2 weeks. So we're going to watch that closely. And certainly the futures were up at one point, up 20 cents. I think it closed only up about 9, but it's higher for the fourth day in a row. And it's really hot up in through Canada as well. I think that the trading still remains in that same channel, that $1 channel that we've been in for quite a while, from about 566 to 660 again. But still, the market is trending up in the corn. And so, when we start to get that little bit of a tsunami moving, it's kind of hard to stop it at this point. And the low was at 566.5, and that was only on July 6th. So the market's really made a pretty decent move since then. The option open interest, the one thing I wanted to add was on Thursday last week, they had 11,800 contracts. And even with as big as the open interest is in corn, that's a huge number. And basically that came in to all the way up to the $8 calls. Now, over the weekend, we added another 4,500 calls to the option open interest. So we see that there's a lot more participation in that market. That was in the $6 to the $7 strike, and really even added 3,000 puts. So how about that for some risk management there? That's in the $5 to $5.50 strike. So everybody's jumping back in the market, expecting a lot more action. And certainly with this heat, we can see maybe more volatility or just the movement like it is today. The C-vol for corn is at 47.9%, so still very strong. Now wheat today was way up as well. That strong export sales and global export uncertainty, certainly out of the Ukraine area, is really driving the market here. It brought in a lot of buyers in a big way. We were up 48 cents at one point, and really across the board, Kansas City and Minneapolis, all very, very strong. There was just some talk that perhaps that maybe this CPI number that came out last week, is this the tippy top of inflation and have everything turn around? Well, if it is, then certainly this is a great point to buy. But if it's not, I think that it could be hanging around for quite a while and certainly impacting our markets. We did add 4,600 contracts to the call side in wheat, and that's kind of a big number, mostly to the $9 and up to the $11 strike. I think that says a lot about people starting to lay some bets down that the market's going to continue to move higher. Certainly, if we're hot for the next couple of weeks, that's something to be watching going forward. The C-vol also was up 2.5% on wheat, up to 52.5. So that's well over the 50% mark. That's something to watch. I think the recession issues and is a real concern. It's going to be impacting our markets going forward.